Imagine this, it's mid-2026, you open up your portfolio and it's worth more than your house. Actually, forget one house, you could buy 2 houses if you felt like it. And no, you didn't hit the meme coin jackpot. You didn't win the lottery. You just stayed invested while everyone else panicked and sold everything. Sounds like hopium, sounds like bullshit. You're about ready to click off the video. Lark, screw you, man! I get it. Stick around. Because the macro setup unfolding right now is too bullish to ignore. The Fed is about to slam the money printer into turbo, and the last time this happened, millionaires were minted. Now I know what you're thinking, but Lark, didn't you just make a video a few days ago that some kind of mega bear market is coming in 2026? Yes, we did. We discussed a lot of different theories here on the channel, trying to give you all the information that you need to make your decisions. The filthy bears, I think, are going to be wrong. Just FYI. So the first big tell, and this is the reason why I've listened to the data in this video. The first big tell is that this bull run is loading. Liquidity. On December 1st, the Fed finally killed quantitative tightening after yanking about $2.4 trillion out of the system. The second QT died, the Fed didn't even wait to play coy. They immediately slipped $13.5 billion into the overnight banking system. That's the overnight repo markets. That's the second biggest liquidity shot since COVID. The Treasury, by the way, they're buying billions as well. This is way bigger than anything we saw in the dot-com era. The numbers are so much bigger now. You don't fire off a move like that unless banks are thirsty for cash. And when fresh money enters the system, it never sits still. Okay, now it's just the overnight repo markets, has to be repaid by morning and all that kind of stuff, but you can see where we're heading. The system requires more liquidity. Stocks, credit, crypto, that stuff moves fast when more money starts entering the system. That's why macro analysts like Fundstrat boss Tom Lee is calling this the turning point. The last time the Fed ended QT, markets ripped 17% in 3 weeks. And Bitcoin, being the most liquidity-addicted asset in existence, usually leads the charge with QT over, repo injections back on the menu, Treasury buying, and a December rate cut basically pre-announced. The liquidity backdrop is turning very bullish, whether people like it or not. Yes, we have problems. There are job losses. Japan might throw a tiny speed bump our way. There's an 81% chance the Bank of Japan hikes again. And every time they've done that, Bitcoin has taken a quick punch in the face. But let's be real. Bank of Japan hikes are a water gun compared to the Fed's Firehose. Plus, if there is a real risk of the carry trade unwinding, the Fed's going to have to intervene because the last thing Trump wants is for Japan to bring the whole damn house down because that's going to be bad for him for the midterms. Global liquidity is made in the USA, not in Tokyo. So maybe we get a little wobble, but the direction is clear. Liquidity is turning back on, and the markets always chase the money. Guys, by the way, if you want to trade Bitcoin, XRP, Solana, Ethereum, all the big coins, dog coins, if that's your thing, you got to get yourselves an account over in BitUnix. It is the hottest exchange in crypto right now. You can long the rips. You can short the dips. You can have a good time trading. Link down below is available to anyone, anywhere, by the way, where you can get some insane deposit bonuses. Listen to this. When you sign up and deposit $1,000, you get $200 back. Deposit $2,000, $400 back. In fact, they have whale bonuses all the way up to like literally put in like 50K, get 5K back, 100K, get 10K back. These are wild deals, man. Won't last for long. Link down below. Go check it out if you're serious about taking your trading seriously. So if the Fed is turning liquidity tap on, the US government is ripping the hydrant open. Washington is running nearly $2 trillion deficits, about 6% of GDP, which is a fancy way of saying the economy is getting force-fed money whether it needs it or not. I know running on deficit sounds bad, but government spending is estimated to be about 1/4 of GDP. So in theory, the more the government spends, the better it is for the economy. Plus, the new tax cuts are estimated to add around 5% to the GDP. That's big, thanks to those lighter income taxes, tip and overtime exemptions. We have to remember, the savings from taxes will eventually be spent by consumers and positively affect the economy. People might even buy some dog coins with that extra money in their pockets. Then comes the tax refund. The federal income tax refund could jump by roughly $1,000 in 2026, thanks to a new slate of tax breaks that took effect in 2025. Again, most people will either spend this money, save it, or invest it. Okay, they're not going to eat it, right? Either way, this is bullish overall. The labor market adds the final accelerant. I know we're getting some pretty mixed employment data right now. U.S. employers have announced over 153,000 job cuts in October, which is 175% higher than a year ago. Unemployment rose 4.4%. However, 4.4% employment is still more or less in the normal ranges. It's not crisis range by any means, but the fact that it's gone up a little bit this year is freaking people out. And with the money printer metaphorically turning back on. They're not doing quantitative easing yet, but they're doing some technical adjustments in the background, okay? Got to be clear about that. But businesses can basically borrow on the cheap as interest rates keep going down. They can expand, they can hire more easily. And with that tax bonus coming, people are going to want to buy more stuff, which means businesses might need more employees. Bottom line, when the Fed turns liquidity taps back on, the government is spraying trillions in the economy while consumers are still holding steady jobs, that's rocket fuel. This is exactly what a fiscal-driven bull market looks like. Explosive, messy, and way harder to fight than people think. And before we forget, we still have the AI Supercycle that probably won't die anytime soon. But Lark, it's a bubble, and it's going to pop. Michael Burry's going to be right about everything. Yeah, look. All bubbles pop eventually. Sooner or later they will. But just look at what's happening right now. The Magnificent Seven and other hyperscalers are expected to spend hundreds of billions of dollars on AI and data center buildouts in 2025. Goldman Sachs estimates global AI-related infrastructure spending could reach $3 to $4 trillion by 2030. This spending doesn't just sit in tech, it ripples across the economy, creating jobs, high-paying jobs, for people to buy dog coins with. Building AI isn't just software. It takes steel, concrete, semiconductors, power logistics, mining. Where's all the minerals going to come from? In short, it trickles down to every part of the economy. Okay, this is a huge economic boom. The AI buildup is just getting started. Trump recently signed the Genesis mission, a straightforward executive order designed to accelerate AI-driven scientific breakthroughs. It sounds vague, but the bottom line is very clear. The United States has no intention of losing the AI race to China. They will spend massively to win. Think about the Manhattan Project. Massive allocation of resources, but for AI. They need to build 50 nuclear reactors by 2030 just to keep up. Okay, they need to onshore basically the entire chip manufacturing process. There's going to be a shit ton of things being built in America. And of course, the real winners, tech companies. When tech companies win, the stock market follows. And speaking of stocks, corporate America is firing on all cylinders. The S&P 500 operating profit margins hit 13.4% in Q3 2025, the second highest ever. Companies aren't sitting on that cash either. Buybacks have already topped $1 trillion year to date, with $1.2 trillion forecast for 2026 to shrink share counts and to lift earnings per share. Higher profits, fewer shares, plus AI productivity and trade tailwinds mean the corporate engine is running hot and markets are riding right alongside it. On the global stage, China seems to be playing right along with Trump's 4D chess. Most export controls and retaliatory tariffs since 2023 are now suspended. China and America are playing nice. They're going to make all the deals. And these deals cover everything from rare earths to pork to soybeans and corn. They're also buying big, 12 million metric tons of soybeans in the last 2 months, 2025. That's a lot of soybeans, man. 25 million annually through 2028. While reopening up critical chip supply lines like Nexperia, the U.S. isn't standing still either. They're trimming tariffs. They're hitting pause on key trade restrictions. Trump wants to run the economy super hot. Now, is it a perfect truce? No, it'll never be a perfect truce between the United States and China. There's always going to be points of difference. But this is exactly the kind of news that gives investors confidence that things are heading in the right direction and that things are going to be okay. Now, at the time of recording, Bitcoin has surged up beyond $90,000. That's just after quantitative tightening ended. There has been no announcements about quantitative easing. Don't believe anybody's telling you that the end of QT starts QE immediately. But it has a major change in the Fed's regime, okay? And don't forget, we're going to get rate cuts this week too. Now imagine what happens when they do QE at some point in the future. When the new guy gets into the Fed, he drops rates to 1%. I get it. You might still think this is a short-term pump before the bear market returns. That's possible. But consider this. Vanguard just announced crypto ETFs are now allowed for their 50 million clients, and they hold 11 trillion in assets for those people. Bank of America is recommending a 1 to 4% allocation to crypto to their clients. Charles Schwab bringing in crypto. Trillion-dollar financial institutions are doubling down. Maybe they see the bigger picture more clearly than we do. The incoming liquidity, the AI-driven growth narrative, and a more stable geopolitical backdrop. This could very well be the setup of a lifetime, and I have no intention of ignoring it. If I'm wrong, I lose a shit ton of money. That's on me, okay? If I'm right, I make a shit ton of money, and that's on me too. Fantastic. Isn't it nice being an adult? By the way, if you love macro insights like this, you want to learn more about stocks, weekly stock reports, weekly altcoin reports, check out our newsletter, link down below. Thank you very much.